Now, you may misconstrue the fact that I've written it as national income and I'm dealing with products. GDP, NDP, NNP, GNP, same way I am dealing with P, isn't it? In fact, it should be I here or Y. Usually the nomenclature Y we use to denote income, isn't it? Either it should be I or Y. Instead, I am using it as P, product, GNP, GDP. Why is it? Because national income is identical. It is an identity. National income identity is national income should be the same as national product, which should be identical as national expenditure. National expenditure, because everything is added up in the circular flow of income, it can be used as national income or national product or national expenditure. There is nothing wrong in it. So the common name that we use is GDP, GNP. It is equivalent to say it as income also, because whatever that is being produced is converted into income, and whatever which is received in the form of income is spent and added up in the circular flow of income, like how the blood circulate in our body. The same way everything is circulated within the economy, and only extra fitting is the net income from abroad in an open economy. That only we did it in the second part. Okay, is it clear? It can be, there is nothing wrong in using it as GNP, because it is the same as gross national income and gross national expenditure, because they are identical, and that is called as national income identity. Now, so we have seen three concepts now. One is gross and net, the second one is national and domestic products, and the third one is market price and factor cost. Okay, then next comes in these things you can give numerical examples and calculate. Just one small thing I'll give you. If GNP is 700 crores, if GNP is rupees 700 crores and depreciation is rupees 60 crores, find NNP. Okay, how will you calculate? It is 640, because gross minus depreciation will give you net. Maybe if it is GDP, it will be NDP. If it is GNP, it will be NNP. That's it. Okay, same way you yourself can practice by giving numerical examples, and you can very well understand, because national income just doesn't stop with the theoretical part of it. It includes a national income accounting, so numerical aspect also comes there, and you can apply your own examples to for a better understanding. Okay, the next one is private income. Private income. Private income is equal to NNP at factor cost. And one thing I forgot to tell you, though we say GDP, GNP, NNP, NDP and all, what exactly is the national income? It is the NNP at factor cost that denotes the national income, net national product at factor cost, because already I told you factor cost represents the income of the factors of production, the rewards or the remuneration that is given to the factors of production, isn't it? That way it comes under the cost, factor cost. So NNP at factor cost is national income, and NDP at factor cost is domestic income, because this is national product and this is domestic product. And the income, factor cost means income. Always we take into consideration the net product, because for depreciation and wear and tear we spend, that is gone. Once that is used and that is gone, that doesn't come back. We have to keep on spending for its maintenance, repair work. So that is not the productive part of it that has to be taken into consideration. So always in national income accounting, the net product is taken, and if it is NNP at factor cost, that is denoted as national income, and if it is NDP at factor cost, that is denoted as domestic income. Okay, is it clear? And let us come to the private income part. For net, we take into consideration the net national product at factor cost minus interest on national debt, interest on national debt minus windfall minus social security contributions plus transfer payments plus gifts plus windfall gains. This is national income and this is private income. Okay, private income means the income which is received by the private people, corporates. So from the national income we subtract interest on national debt. Sorry, we have to add a interest on national debt. What is interest on national debt? When the government is at its difficult phase, government borrows money from the public, and as public we do purchase the bonds and securities and in a way help the government also to meet out the crisis. We will not lend our money at free of cost because money is always available at cost, that is interest, isn't it? So if we lend it to the if we lend money to our friends and relatives, we will not take any amount in turn. If we lend it for other persons for interest, we know money lenders, isn't it? So they will lend money at a cost. The same way, if the government borrows money from us, government is liable to pay the interest rate. So as interest is received through our lending, that is interest income, that becomes the interest income, and that has to be added up. If we receive an income of rupees 1000 from a bond or security every month, won't we add it up in our expenditure? Okay, when it is added up in the expenditure part, that is included, that comes under the private income. Okay, is that clear? So from national income we are adding interest on national debt, and the social security contribution, that has to be deducted. What is social security contribution? Otherwise it is called social insurance. Social insurance. For all the employees, a minimum amount will be deducted from their salary for insurance purpose. We call it as group insurance. All the salaried people, especially in the organized sector, they will have to contribute whether they want it or not. It is made compulsory by the government in recent years. It is called as social insurance or group insurance. That amount is deducted compulsorily. It is obligatory from the employee's side to pay that amount. So that social insurance is deducted from our salary, and when we fall sick in future, or the group employees, the fellow employees, when they fall sick, that amount will be used by the government, which nowadays we use the card, insurance card, mediclaim, or it's not mediclaim, it is a family insurance card, that Kalaignar Kaappeedu Thittam in Tamil we used to say. So Kalaignar insurance, Amma insurance, that way when the government comes, the nomenclature will change. Otherwise it is called group insurance or social insurance. That amount, because it is deducted from the salary, that amount goes out of our packet, and that will not be included in the private income. Because it goes out of the packet means it is not coming under our expenditure. We cannot make use of that money for spending purpose, for purchase purpose. In such case, that amount is deducted. And transfer payment. This is a very, very important concept that quite often comes in economics, which is known as transfer payment. What is this transfer payment? The name itself tells that the payment is transferred. Payment is transferred. I am working and I am getting salary. Is that transfer payment? No, I am contributing my service for which I am receiving payment. So that is called as salary. The laborer works and he gets his wages for the work done. So that is coming under wage. Okay. The landowner gives his, the house owner lets his house for rent and he receives rent for that. So here a two-way process is done. Exchange for something, service for money, that comes here. Okay, exchange of service for money. In the case of transfer payment, only the payment is transferred. Why is it so? Take the example of your scholarship. You are receiving scholarship from the government. Do you do any service in turn to the government for receiving the scholarship? No, isn't it? So the payment is transferred. Do you understand well? You are not contributing any service, whereas you are receiving the payment. This transfer payment will always be done only by the government. I will not make you payment for nothing. Okay? Only the government makes this payment. During periods of time, we came across the corona period, isn't it? That corona crisis that was met out by the government by paying some 2,000 per month to all the households, family households. The government transferred 2,000 to their account. So only the payment was transferred and nothing was done in turn as service. For example, the old age people, they get payment, pension, isn't it? Old age pension. Underline the word old age pension. It is not the pension that the employee receives from the government after the retirement. It is that is called as retirement pension. Old age pension means they are orphans, they do not have anybody to take care of them. So the government is paying them 1,000 rupees per month. The handicapped people, they are paid by the government some fixed amount per month. And now also in Tamil Nadu, the government is paying 1,000 to the poor households every month. That is called as transfer payment. Old age pension also comes under this transfer payment. Once again I repeat, the transfer payment means only the payment is transferred. It is not a two-way process. It is a one-way process. Government transfers certain amount to the people as a for social upliftment. This is called as transfer payment. Okay. Then next comes the gifts. Gifts, this transfer payment may be from within the government or from abroad also. Because ours is an open economy, I have already told. And gifts, the gifts we will receive sometimes from the government and from abroad also we will receive gifts. That is added up. If it is in money term or suppose a building is given for a great singer, okay, won't it be added in his income? Recently, Kavingir Vairamuthu was given a house by the government. So that got added up in his private income. Government will not get it back. It once given means it is a gift and it will not be taken back by the government. So that is included in his private income. Next comes windfall gains. Windfall gains, he is not working hard to get the income. In super singer, children or girls and boys, they participate in a super singer competition, singing competition. In that they receive the prize, a cash award, sometimes cash awards, and sometimes a house is given, and some consumer articles are also given. That will be included as a gift. And windfall gain, suppose some cash award is given, that is windfall gain. They themselves would not have expected it out of fortune, out of their luck, they would have received. This is called as windfall gain, and out of which they spend. So the income received and they spend from their income, that is included under the private income. Is it clear? Under private income, what do we include apart from national income? What is included? Interest on national debt is included because that is received by the people from the government. Social security contribution is subtracted because it goes out of their income. Then transfer payment is included because it is added up to their income because they receive from the government, and gifts also they receive, and windfall gain also they receive. All these are receipts except this social security contribution which goes out of their packet. Okay, so this is private income. If it is these can be added up and subtracted either in domestic product or to the national product. NDP at factor cost, if it is added to that, the domestic income comes, and if it is added up in national income, then national income is calculated. It can be calculated either way. Then next comes personal income. Shall I continue? Personal income. Same way, I have taken the same NNP at factor cost minus social security contribution minus corporate profit. Already we have done this, so it need not be taken. Minus corporate profit tax national, instead of NNP at factor cost, it can be private income, so that you can easily by heart it. Private income minus corporate profit tax, because already we have done away with the private income. What is private income? NNP at factor cost or national income minus social security contribution plus transfer payment plus gifts plus interest on national debt plus windfall gains. All these are added up to get private income. So we have acquired the private income. Next comes personal income. How to calculate personal income from private income? Private income minus corporate profit tax. What is corporate profit tax? The tax that is paid by the corporate sector. Or corporate sector, all the industries, companies, registered companies, all these are generally called as corporates. Those who are running their business with high profit motive, they are called as corporate sector. And the corporate profit tax means the tax which is imposed on their profits. That is called as corporate profit tax. Corporate profit tax is subtracted from the private income to calculate personal income. Next concept is personal disposable income. This is very important because the amount which is disposed of for our expenditure. Actually, we earn income to spend, isn't it? We earn income to part away with. So our spending is very important. The amount which is ready at our disposal is called as personal disposable income. Here we have calculated personal income, isn't it? From personal income, we are subtracting direct taxes. What is direct tax? The income which is imposed on the tax which is imposed on the income of a person. The tax which is imposed on the wealth of a person, they are called as they are called as direct tax. Those direct taxes, the tax which is imposed on the income of the individual, this is a corporate sector. The income which is imposed on the corporate sector, the tax which is imposed on the corporate sector's income is called as corporate profit tax. Usually we don't call it as income, it is called as profit, because profit is different, income is different. If they are doing their business with profit motive, it is called profit. Okay, we are earning income, it is not profit. Our earning income is not profit. So profit and income are different. So from personal income, to calculate personal income, if we are subtracting or deducting corporate profit tax from private income, we get personal income. Next one is, if we get in order to get personal disposable income, we are subtracting direct taxes from the personal income. because we are continuously coming from GDP, GNP, NDP, NNP, then national product, domestic product, market price, factor cost, then the concepts come in private income, personal disposable income, isn't it? So there are relations. These are all called as aggregates because national income comes under the macroeconomics. In macroeconomics, everything is dealt with in toto. Everything is dealt with in aggregates. So the relationship between aggregates is very, very important. What is this relationship? See, from starting from GDP, one by one we have come up to personal income. There is a relation from personal private income was calculated from NNP at factor cost or NDP at factor cost. Then personal income was calculated from private income. Then personal disposable income was calculated from personal income, isn't it? So there is a relationship from one how to get the other one. There is relationship which is known as relationship between the aggregates. So from personal disposable income, if we subtract direct taxes from personal income, we get personal disposable income. Next comes this is the last concept of national income, known as per capita income. What is per capita income? You all have studied Indian economics, so you would be familiar with the word per capita income. It is the income calculated per head. If there are 4 members in the family and the father is receiving 4,000 rupees, each one is getting, though they are not earning member, each one is sharing 4,000 by 4, you get 1,000 rupees, isn't it? That is per capita income. So to calculate per capita income, they need not earn income, it is an income allotted per head. Okay, how to calculate this per capita income? This is the most important index to calculate it comes under the Human Development Index. To calculate the growth and development of an economy or where we stand, to compare the national income between countries, to compare national income over the time period. For everything, this per capita income is very, very important. How to calculate this per capita income? National income divided by population. National income divided by population. National income also is a variable. Population is also a variable. What is a variable? It keeps on changing and it never remains the same. It never, last year national income will be different. This year national income calculated will be different. So national income divided population also the same way. Within a year it will not change that much. Over the period, over the years, population change would be drastic, isn't it? So national income divided by population. If national income is greater, so it is 2000 and it is divided among 200, then the answer is 10, isn't it? If national income is higher and it is divided among only 200 members, then per capita income will be greater. If national income is higher and population is stable, then per capita income will be higher. If the increase in population is higher, the rate of change is very, very important here. The rate of change, because both are variable, both are subject to changes. If the rate of change is higher in national income than population, the per capita income would be greater, higher. If the rate of change in population is higher than the rate of change in the national income, then per capita income will be less. So these are the concepts regarding national income. It is measured in the form of GDP or NDP, and what is once again I give you a recapitulation, that is gross product and net product. That what makes it national income, though we say it as national income. First of all, we should be familiar with this identity: national income, national product and national expenditure. Okay, then what are the concepts, basic concepts in that? Gross product and net product. What makes the difference between gross and net? It is a depreciation that makes the difference between gross and net. Next is national product and domestic product. What makes the difference between national product and domestic product? Net income from abroad is taken into consideration. That makes, because that is an important aspect due to the fact that ours is an open economy. And next one is factor cost and market price. Factor cost includes all the income or rewards or the remuneration that is made to the factors of production, and the market price, that is includes excluding the excluding the subsidies. So net indirect tax, we should not take indirect tax or the subsidies alone, because indirect tax comes on the payment side and subsidies comes on the receiving side. So net indirect tax says you subtract subsidies from the indirect tax, we get net indirect tax. So market price includes net indirect tax and factor cost excludes net indirect tax. Next comes private income. To the private income, from national income we are subtracting the social security contributions or social insurance or group insurance, as nowadays it is called. We are adding up transfer payment, gifts, interest on national debt, and windfall gains. So then next one is personal income. From private income we can get personal income. From private income, if we subtract corporate profit tax, we get personal income. From personal income, if we subtract direct tax, we get personal disposable income. Next, last one is per capita income. National income divided by population will give you per capita income. Per capita income, whether it is higher or lower, depending upon the rate of change in both the population and national income. So with this we conclude the basic concepts of national income, and as I told you already, you can work out by giving numerical examples to all these, and you can very easily understand. Next class we will deal with the measurement of national income.